Greetings, members, one and all of the Salivation Nation. This could push gold up to $2,200 by the end of the year. Let's explore. Yes, indeed. Before we start, I want to encourage you, if you would like, to hit the thumbs up button. If not now, maybe by the end of the video, if you do find it useful and engaging. It certainly does help the algorithm, and also share it among other social media platforms. It'd be greatly appreciated. This is from ANZ, which is the Australian New Zealand Banking Group. They are saying that if the U.S. stimulus package passes here, then it will trigger a price rally in gold. And right now, the relief package, they're talking, $2 trillion again. It was 1.8, and then went up to high as 2.2. It's hard to keep up with the negotiating of this particular relief package that they want to send out. Really, it would be the fourth of its kind to a degree for the coronavirus relief. This is from Kitco.com. Anna Golubova talks about this. Approval of a U.S. relief package will be the trigger for price upside, says ANZ's commodity strategist Daniel Hines and Sonia Kamuri wrote in the latest commodity report. ANZ's forecast for the precious metal sees gold rising to $2,200 by the end of the year, and then climbing further to $2,300 by early next year. Now keep in mind, there has been some forecasts for gold at the beginning of the year, getting to close to those levels. In fact, Goldman Sachs says $3,000 gold. They were short that, but you think about it, gold did climb up $2,050, almost $2,100, earlier in the summer. The outlook for gold is positive amid mounting economic concerns due to the surges in the coronavirus. Accommodative central bank policies and liquidity injections are broadly supporting the market, Hines and Kumari said. Physical demand is also projected to recover ahead of the festival season, the strategist added. Again, that's related to Indian demand for gold and cultural aspects for gold too. That's going to help push prices up. We see the gold price reaching $2,300 an ounce early next year, they wrote. In the short term, uncertainty over the stimulus package and stronger U.S. dollar have been weighing on gold, the strategist said, while noting that this pressure is likely to only be temporary. But, keep in mind, with a cautious point of view, which is a view I like to take, that it very well could be that if Trump is reelected and things kind of go and we get a vaccine, that could turn around very easily. And again, notwithstanding, looking at the certainties of an incumbent as opposed to the uncertainties of a challenger from the opposite parties, what we're talking about here. Not necessarily getting political, although politics does certainly weigh in and will change the calculus, but also just the unknowns of a different individual in the office and administration and what they may do. But so we could see that as the antithesis to this prediction here. Recent strength in the U.S. dollar triggered profit booking in gold. That said, we see the backdrop as supportive, and the recent price setback is likely to be short-lived, Hines and Kumari said. Gold's outlook will remain positive, a positive one heading into the election in light of the political uncertainty, increase in coronavirus cases, and low interest rate environment, the strategist said. Going back to that with the political uncertainty, there will still be uncertainty even if there's a Trump victory. And in fact, the unrest that is likely to follow will certainly not bode well for the dollar and could bode well for gold. So that is kind of the backdrop that we're looking at, but sooner or later that will calm down, hopefully. unless by some chance it's a close election, then and it is a long drawn out election as far as counting mail-in ballots and the like. If it takes a week or so, finish those counts and they're slow, and then there's a recounts, and then there's charges for fraud and the like. Well, that could certainly rise tensions for sure. That's not going to bode well for the dollar and how it's viewed around the world. But so there's a lot of different factors here. So I think them making this bullish call gives some assumption that there will be some uncertainty and some concern with the election, and maybe even lasting into next year. But next year, hopefully, there will be some calm in the markets and with the coronavirus and the like. But we don't know. We don't know exactly how that's going to work out. Obviously, by early next year, we're not going to see a vaccine being distributed to the masses, but hopefully by then it will be distributed to the most vulnerable among us, and hopefully some of the treatments will be better as well for the coronavirus. By that term, therapeutics and treatments have already made great inroads in that area for sure. So the article goes on to say we see gold remaining well supported, as it mentioned, and gold, and this has already seen ETFs inflow increasing strongly. Gold-backed ETFs have experienced 6 straight days of net inflows and are now up 34% this year alone. However, the $2,300 an ounce level expected to be reached in the first quarter of next year will likely mark a peak in the gold rally for the next year, according to the bank. So that is the top, and they think it's going to go down from there. Maybe even no matter who's president. We shall see. It'll be very interesting. That's an interesting prediction that they're saying that for sure. ANZ said that in the second quarter of 2021, gold is likely to begin its decline. First to $2,100 in June 2021, then down to $2,000 in September of 2021, then down to $1,900 in December 2021. At the beginning of 2022, the bank is pricing gold at just $1,675 per ounce. Wow, that's quite a long prediction to make, and I think no one should take any of these numbers seriously by them. I do think that their prediction of $2,200 by the end of the year, if the fiscal stimulus is passed, I think is something to take seriously, though, from now until the end of the year. For silver, the bank projects $30 an ounce price tag by early next year. However, similarly to silver is estimated to begin its decline in the second quarter of 2021 and end next year at $23.80, which is just a little bit lower than what it is now. So really, they're saying silver as being a more stable asset class than gold. Very interesting indeed. Now keep in mind, third quarter numbers for the economic numbers will be coming out the weekend before the election, so next week essentially. And Donald Trump has essentially pumped them up to be very good numbers. We shall see. If he's right, then that's going to be a pushback against gold and silver prices, I believe. But nonetheless, by then, we very well may see the stimulus package be passed, but maybe not. As of the recording of this video, it is not. They have not come to an agreement yet, and according to Nancy Pelosi, they have till the end of the day before an agreement, before this thing can be enacted before the election. But again, as with any of these predictions, take them for a grain of salt. No one really knows, but I do believe I tend to be more bullish on this than not. This could be because, well, you're printing approximately $2 trillion more dollars to as a relief or a stimulus to the economy that's going to be injected, and a lot of that money is being pushed outside the United States and into the markets, and I think that is going to weaken the dollar overall compared to the other currencies out there, because even though there's a stimulus and liquidity injected into the markets by other nations around the world, the sheer volume of the currency being printed and distributed is massive compared to other countries around the world. So that's something to consider as well. Very interesting indeed. And then we have what the IMF is doing, and this talk of a new digital dollar and a reset, the Big Bang, they call it. All these things come into play that make at least people like us nervous about what this new dollar is going to be like. And that's why many of us are gravitating more towards money that has been around for literally millennia, thousands of years. Gold and silver have been around, and the metals themselves could never be tarnished when you think about their properties and the fact that they are money. And they can be pushed down based off of natural market forces and manipulation, understanding that that does occur as well too. But understanding the true value of the metals, you have to be patient and you have to hold on to them and respect them for their historical and intrinsic values. So there you have it. Like to extend a multitude of gratitude to you all for taking the time to watch this video, and encourage you to please rate, share, and I do mean that, all these things. I really am interested in you. If you press that thumbs up button, it really does help get the word out there, and share it among other social media platforms. I've heard there's a new one out there called Parler, and others, Instagram, Facebook, Reddit, the dark web, hey, might as well, and everywhere else you can think of. And comment. And then finally, if you haven't already, go ahead and hit that subscribe button and hit the little bell notification too. Sometimes it doesn't work, other times it does, but if you're interested in keeping up with the latest news as much as I can do it, and also just some commentary on the precious metals as well. All right, there you go. We've run out of calls to action here. Multitude of gratitude. See ya.